Hey folks, and welcome to the Pipnotic Symposium. Today is the 8th of April 2024. Okay, so we're going to run through several assets. We'll start with the American dollar index. We'll run through some other major pairs, and we will finish off on maybe the Dow Jones. We'll see how far we get. I don't want this to go on for too far. Okay, so if we start here, looking on the daily chart, this is the American dollar index. You can see, we're going to go to the weekly chart. You can see that we're starting to kind of have a bit of a pause here in the middle of this range. We have the range from this level here to the low here. We have this nice area of demand just here. Prices poked into it, and then we left. Moved to the other side of the range, which is essentially where we established the sell zone. Came back to this child, this being the parent, and now we're kind of in the middle of that. And so what's happening here? Well, on the 4-hour chart, we're starting to break down. And if we look at the COT data, just going to find it. Excuse me, excuse me. Hiccups, drank my coffee too quickly. So if we look here, we can kind of see who's driving price. And currently, you can see that the people who are most active in the futures market relative to the American dollar index, that's it's the total reportable versus the non-reportable. Okay, so these are typically not going to be the major players in the market. Typically you'll have the commercial and the non-commercial. And the commercial, these are institutions who will typically hedge risk against whatever asset it is that you're looking at. And so if they are producing something like, let's say they're mining silver, they want to try and hedge against low silver prices. And so they'll take on a non-speculative position to do that. Or if you're looking at a company who makes stuff out of steel, they want to hedge themselves against increasing steel prices. And so this is going to fall into the category of the commercial. Okay, and then you have the non-commercial. And the non-commercial these are people who are trading to make money. Okay, and the non-commercials are typically a little bit faster than the commercials at reacting to price differences. But normally you'll see the commercials, they'll define these major tops and these bottoms, which is quite typical. And the non-commercials will be the ones that will quickly adjust and begin to follow the momentum in price. Okay, so for speculative reasons, we want to focus most of the time on the non-commercial, but sometimes the commercial is what will be driving price. And we'll have the opportunity to see this in practice today, because there are a couple of examples of that. The American dollar crossed with the Japanese yen, for example. It's the commercial side that is driving the price of that for the time being. Okay, so if we look here at the American dollar index, the non-commercials, notice how this is simply just the positioning. This is the number of contracts long above in the light blue, and then we have the number of contracts short. And notice how the number of contracts short are beginning to grow. You can see that we're slowly starting to move lower into negative territory. We started off at the beginning of the year here at about minus 15,000, and now we're at minus 25,000. So I think you could, in fact, draw maybe a bit of an average, and it kind of went down. Probably maybe not quite like that, but if we did an average like a best fit algo, it'd probably be something like that. So you can see that we're starting to move more in the direction of accumulating short contracts. And if you look here for the long, you can see as well that we're also starting to move down. And so we're seeing a decrease in buying activity and an increase in selling activity based on what we can see here in the non-commercial data. And if you go to the commercial data, you'll see something that looks quite different. Okay, where you can see the money that is moving into the more long direction. If you look here, I like this one here. This shows the percentage. We have 100% here, and here we have 0, and we started very, very bearish. Okay, very, very bearish, and then prices started to slowly move lower, as you can see here. And so the non-commercials, they are beginning to buy. Okay, and the reason I say that is because here you can see that the light blue, that is the percentage of long contracts versus the dark blue, which is a percentage of short contracts. And so when you see the light blue begin to grow, it means that they're selling more. Okay, and you can just see that quite clearly here. You can also see here the bright blue. We're seeing that this is starting to get a little bit bigger. Okay, so we had really bearish here on the commercial side. You can see just a tiny bit of buying pressure here, and now that's starting to change. Okay, so we're seeing the American dollar on the commercial side start to move higher. Okay, so what does that mean? Well, if we look at open interest on the, what was this? This is the non-commercial, so the speculative money. You can see here that for the first time in a year that we've actually crossed. So now we have more short positions versus long positions on the non-commercial, the speculative side. Okay, so this is really important and interesting information for us. So if we take this information with us to a price chart, you can see here that over the course of the past few days, we can see that prices were still kind of wriggling higher, approaching these highs here, and then we started to see prices move lower from here. And so around here we've had the past 1, 2, 3 weeks. Actually, let's go here, 1, 2, 3 weeks. If we look at the past 3 weeks alone, and let me just remove all the historical data, so we're just looking at the most recent. Okay, past 3 weeks. So we're starting, if we look at the price chart, we went from slightly bullish to bearish. Okay, and so if we look here on here, you can see that where are we? I need the open interest here. We had slightly bullish, that was here at the time, and then now to slightly bearish. Okay, so you can see that the longs have decreased at this price point and the shorts have increased. Okay, and this week, so the data that was reported made public on Friday of last week, you can see that the short positions are continuing to increase and the long positions are increasing less. Okay, so we have a slight divergence of these two, and now you can see, if we look here, you can see that we've had a lot of buying pressure. This is net positioning. Okay, we had a lot of buying. This is 1, 2, 3 weeks ago. So back to the price chart, 1, 2, 3 weeks ago, this is this candle here. We had a lot of buying, a ton of buying. Okay, and then we had a huge drop of buying, an enormous drop. We're still net long, but we had a huge pullback. Okay, or rather a decrease in net long positions. So we had a much bigger increase in our short positioning, which you can see here. We had 39% short contracts 4 weeks ago. 3 weeks ago, we went from 39 to 49. Okay, if we look at the actual numbers, we went from minus 11,361 to minus 14,894. Okay, and so that is, that's telling us that we're having more contract short accumulated. And if we look here at the drop in the long positions, we went from 17,500 to 15,500. Okay, so we're seeing a shift, okay, in sentiment, and you can see that really clearly on the price chart. We had that big bullish month, huge cutback, and now we're negative. Okay, and this week, or rather last week's data, we had an increase. We had another huge accumulation of short positions, but we also had an accumulation of long positions. So we actually went up from 19,000 to 23,000. Then we went from minus 19,000 to minus 25,000. Okay, so net, we are still short. We went from very positive to negative to very negative. Okay, so this is telling us that the non-commercial, the speculative money, they are currently maybe looking to take some profits out of their American dollar long positions, or may even begin to start to sell. Okay, so keeping that in mind, you go to the price chart and you can see this happening. You can see this playing out. Yeah, we actually see that we had maybe some profit taking. Okay, so we started to form these areas of supply. And here we have this zone that was formed last week. Prices left very, very quickly. We poked we poked up into that area and we had a huge resistance. Price was not able to trade at this area for a very long period of time, which is telling me that there's a big imbalance in the supply and demand, so the thinner side of the market is low. We also have this price inefficiency down here, so prices will maybe feed back down towards these lows and potentially begin to rebalance this inefficiency here before we figure out what's going to happen. Okay, and so we're seeing negative, or rather less positive flows moving into the American dollar. Okay, so this is interesting information for us. Okay, so now let's go to the Kiwi American dollar and see if that is telling us the same thing. Well, the Kiwi crossed with the American dollar. If the American dollar is getting weaker, what's going to happen to the Kiwi? The Kiwi, providing that we still have support for the Kiwi or New Zealand economy, is likely going to appreciate in value for the shorter term. Okay, and we had this area of demand that was formed. Looks a little bit like this, doesn't it? Kind of turned upside down. If we kind of just draw that, this kind of... Okay, so maybe the opposite is happening here, where we have prices kind of leaving. We have, like, we come down to this low and then we go up, and maybe an expectation of prices moving down into this area and having a bit of a reaction as the American dollar weakness continues into this week. Okay, so this is something that we would likely expect during this week. Okay, we have some daily supply around here. We have a turning point. We had the buy zone. Prices moved below that. Okay, from around this area just here. Okay, so we do have some interest in selling from around here. We have price imbalance. Okay, we have a market structure which is starting to break down just here. Okay, we have an area just here which prices could revisit in an attempt to drive prices a shorter term a little bit higher from here. Okay, but we'll have to watch the data and see what happens. But I think this could be something that'll play out during the coming week. And if we look at the Kiwi data here, we go to the New Zealand. It's called NZ, and we have a look at. Let's take more data so we can see. You can see that the what do we have? We have the commercials are long the Kiwi, and non-commercial are short. So if we take that to this time frame, where are we going? Let's go to the daily data. We're moving lower, which is telling us that the non-commercial are driving the price. So we want to focus on the non-commercials, okay, and you want to see what's going on there. And you can see here that we are actually seeing, if we go to the open interest, we're seeing the shorts pick up relative to the longs. Okay, this is open interest and this is percentage. Okay, and notice here net positioning, we've actually seen a continued decrease in longs relative to the shorts. Decrease of the longs relative to the shorts. We're seeing pullbacks in price. You can also see here that we are, if you look at the percentage, we're seeing an increase in the net positioning of the shorts relative to the longs. Okay, so this is bearish for this pair, and so we have like this envelope here, and you can see that we have this above. Okay, so we have, what do we have here? We have about 20,000 contracts long, but short we have 27. Okay, so this is telling us that we have some maybe an indication that prices are going to move a little bit lower. But this is maybe something that will be priced in the coming week. But shorter term, we look at the commercials. The commercials are doing the opposite. They are expanding their long portfolio and they are decreasing their short portfolio. If we look here, you can see they're doing pretty much the opposite of what we can see there. And so what we want to do, actually what I think I'll do, I'll make a graph where I combine all of these, and then we get like a proper net long, let short, so we can see across all of the participants in the market, we combine all positions, how much net long do we have to net short. And I think I'll put that on the overview page because that would be very interesting information. Okay, so going back to the chart, I mean, we are certainly looking to move lower, but shorter term we could have like a little poke into this area and like a small reaction higher from this area here. But we'll have to wait and see. But this is what I'm thinking will potentially happen. If we go to the Australian dollar relative to the American dollar, again we have American dollar weakness. Okay, and so we have seen an increase in the value of the Australian dollar relative to the American dollar, and we have an area of demand that's been fallen below price. And so a visit back to this area here as prices rebalance this price inefficiency, and then a shorter term revisit to potentially this area of supply here before prices maybe revisit this area of demand that we have below price. Keeping in mind the fact that we do have prices reacting at this monthly supply. Just here, tested, prices went through it, but you can see that it's holding. It's holding. Prices came back afterwards once, twice, three times, and it's still holding. But you can see that we're starting to see prices challenge some of these high levels here. So maybe we'll have a shorter term increase in the value of the Australian dollar versus the American dollar. But also something else that I think that we really need to pay special attention to, that is the swaps. And there's not a huge difference between these two, but if you're trading thousands of lots, I mean that's a lot. That's a lot that you'll have to pay if you're holding the Australian dollar versus the American dollar along. Okay, so you want to position yourself in alignment with these interest rate differentials, because these play a very big role. Okay, good. Let's go to the euro versus the American dollar. We have the same thing. These kind of look like each other, don't they? If we zoom in a little bit, go back to the 4-hour chart. We go to the Kiwi as well. Looks like that. Down, demand up. Down, demand up. The euro, down, demand up. And this is on the back of the weakening American dollar. Okay, so we could see some interesting reactions here. Buying the Australian dollar and the euro and the Kiwi due to the weakness, the reported weakness in the COT data in the American dollar. Okay, we'll probably have something similar here in the British pound, which we did. This looks very similar to these, as you can see if we go through all of them. So the British pound is doing something quite similar. Let's have a look at the British pound data. British pound CME. Boom. So what do we have? We have the non-commercials that are driving. Let's see, we are about plus 40 odd thousand, and here we're minus, just below 40 odd thousand. So we're net long here. If we have a look, actually let me see if I can see here. Yeah, so here we have a slight, let's see what do we have, 43.4, 39. Yeah, so we have more bullish momentum than we do bearish momentum. Okay, so this is interesting, and you can see that the non-commercials, which are the two that are the non-commercials and the commercials, they are diverging here, as you can see in the top graph, and you can see that we have more in the line with the non-commercials, and their net positioning is greater than the commercial short positioning, which means that this pair, the British pound, should wriggle higher. So if we go to the non-commercial data, you can see again here, like we saw in the other assets, we have a slow decrease in the bearish positioning. So we're seeing the long positions grow, the short positions shrink. Okay, and if we have a look further down, you can see what this looks like. We were negative. Now we're positive. We're moving more and positive, and we're expanding from last week. Okay, and you can see here, just around here, we crossed over, so we started to go net long, and then prices are just wriggling north here for the pound American dollar. And so this is lending to the idea that we could see a slight appreciation in the value of the British pound versus the American dollar. All right, let's keep going. Let's go to the American dollar versus the Japanese yen. What's happening here? Well, looking at this, we are sitting. This is interesting. We have on the weekly chart prices moved up to this area here, we came down, and then we rebalanced that very quickly. Now we're accumulating high just below these highs here. We had a test, another test, and we're sitting on that now. So what's going to happen? Well, we had a little bit of American dollar weakness, as we saw in looking at the index COT data. So if we look at this, the COT data, the Japanese yen, Japanese yen. Let's see what that looks like. So we have the commercials are buying. Okay, the commercials are standing on a lot, that they're supporting the price of the American dollar versus the Japanese yen. And if you look like this, I mean, this is they're pretty much identical. So let's look at the commercials, because these are driving price, and you can see that this is continuing to expand just a little bit. Again, if we look here, the percentage long to short, you can see that we are slowly but certainly shrinking, which means that we're buying more, we're accumulating more long contracts than we are selling. Okay, so if we go here and look at the open interest short versus long, you can see that we're moving higher here and we're moving lower on the shorts, and so we're continuing to expand. And so based on what we can see here, I mean, it's my expectation that the American dollar versus the Japanese yen is going to continue to wriggle higher. And if we look at the price chart, you can see that we are sitting here. We don't know what's going to happen. We don't really know, but you can see, I wonder if there's anything on the weekly. I mean, there's no data. We don't have any data. But what we can do is just focus on what price is doing, and prices are wriggling higher. The futures market is telling us as well that we're wriggling higher, and so we're probably going to continue moving higher. We also have a huge difference here. We have plus $11 per standard lot long, and we have, what is that? Is that minus 27? That's minus 27 if you're selling, and so that's a lot. And so if you're buying Japanese yen with American dollars, you're paying swaps, and it's super expensive. And so the most intuitive thing to do would be to get rid of your Japanese yen holdings and move into a high yielding currency like the American dollar or the Australian dollar or the Kiwi dollar or something else that's yielding positive, because the Japanese yen is not, and so it's expensive to hold. So we can expect as a result that this pair will continue to grind higher, keeping in mind that we are sitting on these all-time highs. Okay, we had a pretty efficient move down and back up to here, so let's see what happens this week. But I'd certainly be looking to buy if price does manage to move above this area here, buying some 4-hour demand somewhere in here, depending on what happens. But the fact that prices came down this quickly and went back up that quickly, that's telling me that there's a bit more support for the American dollar versus the yen than there is the lack of support. Okay, we go to the American dollar Swiss franc. We have a look here, Swiss franc, and we draw that out. Yeah, I mean, we have the commercials are really buying. You can see here net commercial longs versus the non-commercials, and you can see that the commercials are really driving prices, so they're buying a lot. And here we have open interest for all of the groups, and you can see that the commercials are absolutely positively in first place, but also notice that they are starting to curve back. So let's have a look at the commercials here first of all, and you can see that we're continuing to expand. Okay, we're seeing this little envelope slowly turn lighter blue, and the more lighter blue it turns, I mean, that's telling us that we are moving higher. So people are accumulating long contracts. And if we look here, we can see that we have these, but you can see the short positions slowly decreasing. Okay, and so short positions decreasing, long positions increasing. So if we move lower, you can just see that we are really roaring higher. Okay, but the open interest, notice that we are starting to kind of curve around. So let's this is telling us that we might have a pullback. So on the price chart, maybe there's something there that we should be mindful of, like an area of supply, monthly, weekly, daily supply that prices are currently contending with. So let's have a look at that and see if we can find something. Yeah, so here on the daily chart, yes, we're poking. Yeah, okay, so we have daily supply just here. We have this area here. This is actually the child. We had this one here. Prices came up to it. We left. We pulled back the slingshot, the sell zone, and then price left. And now we're poking up into that area there. But we're sitting on this daily demand. And so, I mean, we have not really managed to move through this, and it's holding price for the time being. So we have to see what happens here as prices continue to move sideways. But looking at the COT data, we're still accumulating long positions. Okay, so we could pop through here and then come back down on the back of this and then continue moving higher. But we have to see what happens here. Going on the smaller time frame, see if we have some breaking down. You can see here that we had, maybe on the hourly chart it's a bit clearer. Yeah, so here we had here tested, removed. What area removed it? This one did here. Okay, tested, and so now we're struggling with that. And so if we have a nice inefficient move up into here, I mean, this would be a really nice place to begin to sell a shorter term dollar versus a Swiss franc. And this is again based on the fact that we're slowly starting to move negative or shed some open interest longs here on the American dollar versus the Swiss franc, keeping in mind that we are continuing to expand. So this could be just like a period of extended accumulation as prices continue to move higher. Okay, moving on, we have the American dollar versus the Canadian dollar. So what's happening here? Well, we have prices. Let's look at the COT data first of all. CAD, Canadian dollar. We'll punch that in, and you can see we have commercials long. We have these beginning to kind of move in. As you can see, the commercials are starting to sell. There's less interest in buying American dollars relative to the Canadian dollar. So going to the commercials, you can see here that that we are, what are we doing? Let's have a look here. Okay, so we are beginning to we expanded, and now we're beginning to contract. So looking here, I mean, open interest is declining in the longs, and we have maybe slightly greater decrease in the long interest than we do decreasing in the short interest. Okay, and so this could lend to, let's see here, we had 121,000, 121,200, and we had 123,007. So there's not a huge discrepancy there. So let's see what these guys are doing, the non-commercials. You see the non-commercials are continuing to sell. We had a slight, you can see that the selves are continuing to expand negative quite a lot, and we're having just a slight increase in the long interest on the non-commercial side here. But you can see that the net positioning is still very bearish for that, and you can see that the shorts are still increasing here. You can see, and we also have, like, as we can see here, like a slight increase in the accumulation of long contracts, the Canadian dollar versus the American dollar. So that's telling us that there's not a really clear signal, but we could see prices begin to break down here. And so looking at this, I mean, we have inefficiency where price is currently located. Let's see here here we have inefficiency, big rejection here as prices move here. Let's see what we went into. So we went up to here. Okay, prices poked into there. We're reacting. And now prices are beginning to break down, standing on this price inefficiency. So I would be pretty keen on selling revisits to these highs, stops above this daily supply here, in anticipation that price makes an attempt to rebalance some of this inefficiency here, again on the back of this increased short accumulation and less accumulation of long positioning. Okay, let's go here. This is silver. So what's silver doing? Yeah, silver is actually kind of an interesting one. Let's have a quick look. Silver. Okay, here. Well, we have the non-commercial still super bullish here, but we have net short. We have, what's that, 80, 67? Minus 67, 700. We have plus 53. So there's a clear increase on the speculative side, short. Okay, so we would expect that prices would contract slightly, but we don't know. Let's have a look here and see what it looks like here. You can see that we have like a pretty clean, clear, bullish open interest on silver versus the American dollar. We're also seeing, I think if we attached a moving average to this, that, you know, we're picking up here towards the end. We're still expanding week on week relative to last week, and we've had like consecutive weeks of expansion here. On the long side, we had a pullback, profit taking, and now we're expanding once more. And so we could continue to see this moving higher. So I'd be pretty interested on buying pullbacks in silver. And where do we have those on the daily chart? We've got this. We have this weekly demand here, right there. I'd be pretty keen on getting involved there. And this is actually where prices departed from after moving beyond these highs. You can see here we had an attempt, failure, accumulation, and then we popped. Okay, so prices are looking to move higher from here. So I have like a long bias on silver now. So looking at the 4-hour chart, I mean, where would we look to get involved? And you can see that we just have this nice area, this weekly demand here that we identify. We also have this very clear zone here, just down here, and then prices kind of moved around, accumulated, and then we popped north. We have this area of demand. Prices tested it. So this has to go before we start to get worried about longs. But I think for the time being, prices are likely going to continue moving higher until we reach the opposite side of the book, and we're getting there. We're inefficient into something here, and so I'd be pretty interested in maybe selling once prices get up to around the $28.50. That'd be a pretty interesting place to begin to shed a little bit of that, but we'll have to wait and see. Let's have a look now at gold. Still expanding. So we go to the non-commercial. Wow, I mean, such an overweight of bullish accumulation. You can just see, I mean, super bullish. But what we also want to pay attention to is that we are sitting on year highs, year extremes. Okay, and the last time price came up to this level here, we started to pull back, and we're there now. And so we could see a pullback in our bullish positioning, and you can see here that we did indeed have an uptick in the bullish positioning, but we also had an uptick in the selling positioning. And so we could see, let's see what's happening here. You can see these guys, the commercials are expanding their accumulation of short contracts here, and so. Yeah, we could see gold begin to wriggle south from here, just shorter term. Gosh, we're also very inefficient. We don't even have these historical prices before, do we? So we've never been here, and so yeah, I mean, I'd be pretty keen on a pullback and then buying at demand, and we have that right here. I mean, look at this. This is super clear. Let me remove this. Yeah, this is really clear demand. If prices come back to this area here, what is that, the $2,063? I mean, that's a very clear buy. And so just waiting for prices to eventually wriggle back down to here. You can see we had this area of here, demand, prices came down, we tested, we're inefficient, but we still are supported. And so we could see prices wriggle higher before we eventually maybe begin to rebalance just a little bit. And we can see here, down here, we have an attempt failure, attempt failure. So we do have something here. We've got this, and we do have this. And so we could see prices kind of wriggle back down here should prices begin to move down. But we are super tall. We're at these year extremes, as you can see here, year extremes. So that's a big deal. And so I think that we could expect maybe a bit of a pullback from here. Okay, so let's continue on. Let's see, we don't want to look at platinum. Let's look at oil. Okay, oil, big dump. That's only the 4-hour chart. Let's have a look. So we're approaching some highs, daily supply, which was tested. So let's have a look here. Oil, West Texas. Let's grab the physical. What's happening here? Whoosh. I have non-commercials. They're buying. The commercials selling. Excuse me. Let's have a look here. We're seeing continued expansion to the upside on the non-commercial side. And so you can see like a pretty clear like decrease in these short positions. We were pretty minimal. We got a little bit short, and then we started to slowly build up. So we'll probably see bullish pullback, bullish. So if we go to the price chart, and here you can see it. Okay, bullish pullback, and now continued bullish. Okay, and so we're visiting these highs here, so we want to pay attention to where we are up here. We want to see what are we doing. You can see bullish, profit taking, reaccumulating, and now we're continuing to expand. We still have open interests on the side of the bulls for the non-speculative side, and so we could expect this to continue to wriggle higher. The commercials are continuing to do the opposite as expected. What I really need is net long and short with all of these groups added together. I'll have that next week when I redo the new COT data. That would be very telling, because then you can see, okay, where are we going? I mean, net long, net short, what's going on? Because this would be very telling and very powerful, I think. But I think for the time being, buying pullbacks, keeping in mind that they are quite high, and so you want to be buying at like some nice discount prices. So if we go here, I mean we have something here. Okay, we have this daily demand, which is beautiful. This was formed. Prices came back in respect to that area beautifully. We go here on the hourly chart, and you can see prices are gapping lower, and so I'd be pretty careful. So this is we're re-quoting oil prices lower. Okay, so we had a gap lower, and so maybe a revisit up to here. Maybe we, depending on what price looks like as it approaches this area, if we manage to move up into this area inefficiently, then I think we could see a nice move lower back to something like this, somewhere around here. Actually, let me use a rectangle, something around here. This could be interesting, something around here about the, what is that, 80, 82, 83, and then below that we have here, okay, because this is essentially where we had this little zone. We broke away. We have not yet been back to this area here. This is the 79. We managed to kind of quote higher prices, accumulated higher prices, and then move away. And so, yeah, maybe shorter term, short positioning, and just buying at pullbacks at key areas, as we can see here. Okay, let's have a look here. Yeah, I mean we're still moving nicely higher on the non-commercial speculative money. Okay, let's continue moving on. Let's have a look at the S&P. What's happening with the S&P? Let's have a look at the E-minis. E-mini S&P. Let's have a look here. Okay, so we have a non-reportable. Okay, so we have the commercials. Sorry, the non-commercials, they are expanding. So the speculative money is looking to buy more S&P. The commercial side, they're doing like a nice steady accumulating. That looks pretty flat. Okay, it looks pretty flat, but we do have a slight decrease in the accumulation of short positions here, as you can see here, and so expansion on the long side. And so open interest, we do have contraction in the shorts. You can see the shorts moving lower. Open interest, the same is happening, and this is happening slightly more aggressively than the longs. And so we could see continued higher prices in the S&P. If we look at the price chart, we want to be looking at this. Let's go to the weekly chart, and we're still flying, aren't we? We're still flying. So you want to be buying at logical places. Here we have a logical place. These trend lines don't even work because it's so steep. But we could have some shorter term short trades here. We're seeing a lot of rallies and then very quick recoveries, inefficient rallies, very quick recovery, a struggle higher, a very quick departure. See, when you see that, when you have prices wriggling, struggling higher efficiently, and then gapping lower, this is telling us that the thin side is lower, the thick side is higher, because we're struggling, we're having a difficult time moving through this liquidity. Then we gap lower. Okay, we had efficient move. Then we started to do this here. We started to have, this isn't terribly efficient, but we kind of moved higher. Then we gapped lower. We're struggling higher, gapping lower. And so I think that we could see like some pullbacks here, but shorter term pullbacks, because I think this is going to continue to go. Here we have a very obvious, nice area. Probably see it clear on the daily chart. Yeah, so we've got this one here, which is interesting. We've got this one here as well. Okay, well that's way lower, but I would think that prices are probably going to have a bit of a small pullback before they continue higher. But I think that longer term, I think we're moving higher, but nobody knows for sure. Let's have a look at the Dow Jones. Kind of a similar situation. Let's jump on to the COT data. Dow Jones. Matter of fact, we're going to stop there. That's 42 minutes. That's too long. So I'm going to stop it at that. But I'll get that dashboard written. We'll get the cumulative net long, net short. So we'll have that ready for next week. And if you have any questions, let me know. Thanks for watching.